Nobody is talking about Lambos here. Nobody is screaming about price targets. Nobody is telling you to mortgage your house or go all in on anything. What I'm about to share with you is something quieter than that. And because it is quiet, because it does not come with flashing lights and hype and noise, most people are completely missing it. I have been watching this build for a long time, and what I am seeing right now in the XRP ecosystem is not a short-term trade. It is something that looks a lot more like the early internet than anything the crypto space has seen before. Stay with me, because this conversation is different. What is up, everyone? John OG here, analyst, researcher, and someone who has spent years watching the intersection of traditional finance and digital assets from as close a vantage point as I can get. Welcome back to the channel. If you are new here, welcome. You have found a place where we do not chase price pumps, we do not make guarantees, and we do not treat you like you need to be sold something. What we do here is think carefully, speak honestly, and try to give you the kind of perspective on what is happening in this space that you can actually use to make more informed decisions about your own financial life. Today's conversation is one I have been wanting to have for a while, not because there is a big breaking news event driving it, but because sometimes the most important things happening in a market are the ones that move the slowest and make the least noise. Before we go any further, and I will say this every single time because I genuinely mean it, nothing in this video is financial advice. I am not a licensed financial advisor, investment professional, or broker of any kind. Everything you hear today is strictly for educational and informational purposes only. Crypto markets are highly volatile. Prices can move sharply in either direction. You can lose money, all of it. Please do your own research, speak to a qualified financial professional before making any investment decisions, and never put in more than you are genuinely prepared to lose. With that said, let us get into what I am actually seeing right now. I want to start with a story that most people in the crypto space have heard, but almost nobody has truly internalized. In 1994, if you told someone that the internet was going to change everything, the way we communicate, the way we shop, the way we bank, the way we consume news and entertainment and information, they would have probably nodded along politely and then gone back to whatever they were doing. Not because the idea was wrong, the idea was completely right, but because the timeline was unclear, the infrastructure was still being built, and the immediate reality of the internet in 1994 was dial-up connections, clunky interfaces, and no real commercial ecosystem to speak of. The vision was there. The technology was real, but the world had not yet caught up to what it was looking at. Between 1994 and 1999, the internet went through one of the most famous speculative bubbles in financial history. Companies with no revenue, no real business models, and no clear path to profitability attracted billions of dollars in investment just because they had .com in their name. The frenzy peaked in early 2000 and then collapsed spectacularly, wiping out trillions of dollars in paper wealth and leaving behind a landscape of failed companies and disillusioned investors. That is the story most people remember about the .com era, the bubble, the crash, the chaos. But here is the part of the story that actually matters for this conversation. The internet itself did not collapse. Amazon survived. Google came out of that period stronger. The companies that had genuine utility, genuine infrastructure, and genuine real-world value, they went through the fire and emerged transformed. And the people who understood what the internet actually was, who held through the noise and the volatility and the years of uncertainty and positioned themselves in the real infrastructure plays rather than the speculative froth, those people built wealth that compounded over the next 2 decades in ways that most people would describe as life-changing. I am not telling you that story because I think XRP is the next Amazon. I am telling you that story because the structural parallel between what the internet did to information and communication and what XRP's underlying technology is designed to do to value, and money is the most important framework I know for thinking about this asset correctly. The internet was the infrastructure layer for moving information. XRP was designed to be the infrastructure layer for moving value, not a speculative instrument, not a casino chip, an infrastructure layer. And the question that determines everything else about how you think about this asset is whether you believe that the movement of value, of money, across borders, between institutions, in seconds, at near zero cost, is as important a problem to solve as the movement of information was in the 1990s. I believe it is, and here is why I believe the evidence right now is pointing more strongly toward that thesis being realized than at any point in XRP's history. In early 2026, something is happening in the XRP ecosystem that is genuinely extraordinary. And the reason it is not getting more attention is precisely because it is happening quietly, not through headlines and hype cycles, through infrastructure deployment by institutions that move slowly, deliberately, and without fanfare. Société Générale, one of Europe's largest banks with $1.8 trillion in assets, chose the XRP ledger as the infrastructure for its regulated euro stablecoin. Deutsche Bank announced integration of Ripple's technology into its cross-border payment workflows. Aviva Investors, a major European asset manager, partnered with Ripple to bring traditional funds on-chain. The XRP ledger reached number 2 globally in real-world asset growth, outpacing Solana, Polygon, and Avalanche. And at the same time, exchange reserves of XRP are sitting at 7-year lows. OTC supply, the pool of XRP available for large institutional buyers to purchase outside of public exchanges, has drained dramatically, with institutional demand surging 2,490% in an 8-hour window in November 2025 alone. Spot XRP ETFs launched in the United States and accumulated over $1.3 billion in assets under management in their first month, recording a 55-day consecutive streak of net inflows that broke records across all asset classes, and 42 new wallets holding more than 1 million XRP each appeared in January 2026 alone, while retail sentiment remained fragile and uncertain. What that combination of signals describes is something very specific and very important. It describes a market where the people who understand this asset most deeply, the institutions, the large holders, the long-duration capital, are accumulating quietly and methodically while retail attention is focused elsewhere. That is not speculation. That is what the on-chain data actually shows. And in my experience watching markets, that kind of divergence between what the data says and what the narrative says is where the most important long-term opportunities tend to live. Now I want to talk about the wealth-building dimension of this, because that is ultimately what this video is about, and I want to do it in a way that is grounded and honest, rather than hyperbolic and irresponsible. The reason I use the .com analogy is not to suggest that XRP is going to follow the same price trajectory as any particular technology company. It is to make a more fundamental point about how genuine infrastructure shifts create wealth, and specifically, what kind of mindset and patience that wealth creation requires from the people who participate in it correctly. The people who built real, lasting wealth from the internet era did not do it by trading in and out of .com stocks during the frenzy. They did it by identifying the genuine infrastructure plays, the companies and technologies that were actually solving real problems, that had real utility, that would still be standing and operating after the speculative excess was washed out, and by holding those positions through the noise, the volatility, the corrections, and the years of frustrating price action that preceded the eventual recognition of real value. XRP is currently sitting in a position that has some meaningful structural similarities to that historical template. The technology is real. The use case, cross-border settlement, Nostro and Vostro account replacement, real-world asset tokenization, is solving a genuine and enormous problem that the global financial system has been trying to address for decades. The institutional adoption is not theoretical anymore. It is happening in front of us in the form of major European banks deploying on the XRP ledger, institutional prime brokerage capabilities being built on top of Ripple's infrastructure, and regulated ETF products creating a permanent, structured channel for institutional capital to flow into this asset. And the asset is currently priced, by many measures, at a meaningful discount to the structural reality being built around it. Exchange reserves at 7-year lows, OTC supply depleted, institutional accumulation ongoing, regulatory clarity achieved after years of legal overhang, a national trust bank charter conditionally approved by the OCC, RLUSD stablecoin growing at 1,800% in its first year, faster than USDC grew in its comparable period. These are not the signals of an asset at the peak of its story. They are the signals of an asset in the middle of a structural transition that most of the market has not yet fully priced in. I want to be careful here because careful is the right approach. None of what I just described is a guarantee of any specific price outcome. Markets are not linear. Institutional adoption does not translate automatically or immediately into retail price appreciation. The path between where XRP is today and the full realization of its infrastructure potential is going to be long, nonlinear, and filled with volatility that will test the patience of anyone who holds it. The bear case, stagnant adoption, failure to generate sufficient transaction volume on the XRP ledger, competition from other networks including Swift's own blockchain infrastructure initiative backed by JP Morgan, HSBC, and Deutsche Bank, is real and deserves honest acknowledgement. The question I ask myself when I think about whether this is a genuine long-term wealth-building opportunity is not whether XRP is going to hit any particular price by any particular date. The question I ask is whether the problem XRP is designed to solve is real, whether the technology is capable of solving it, whether the institutional environment is moving in the direction of deployment at scale. and whether the current price reflects the full value of what is being built. And my honest assessment, based on the research I have done and the data I have reviewed, is that the answer to the first three of those questions is yes. And the answer to the fourth is that the price does not yet fully reflect the structural reality being built. That is not a call to action. That is an observation about where we appear to be in the adoption curve of a technology that was designed from the ground up to serve the needs of global institutional finance, and that is, right now in early 2026, beginning to have that design validated by exactly the kind of institutions it was always intended to serve. The dot-com era created generational wealth for the people who understood what the internet actually was before the mainstream did, who looked past the noise, the speculation, the crashes, and the hype, and positioned themselves in the genuine infrastructure of the thing being built. The question this video is really asking is whether we are sitting inside a comparable moment right now for the infrastructure of global value transfer. Whether XRP, the asset designed to be what the internet was for information but for money, is in the place the internet was in the mid to late 1990s, early enough that the price does not yet fully reflect the potential, late enough that the infrastructure is real and the institutional validation is arriving. I think the evidence says yes, not with certainty, not without risk, but yes. And I think the people who are quietly accumulating right now, the 42 new million XRP wallets, the institutional ETF buyers, the OTC desk participants draining supply, think the answer is yes too. They are just not talking about Lambos while they do it. That is the conversation I wanted to have today. Quiet, grounded, honest about the risks, clear about the opportunity as I see it. If this gave you a framework for thinking about XRP that you did not have before, or deepened a framework you were already working with, then this video did exactly what it was meant to do. If you found value here, please hit the like button. It genuinely helps this kind of serious, research-driven content find the audience that is actually looking for it. Subscribe to the channel if you are not already and hit the notification bell so you are here when the next piece of analysis drops. Follow me on all the social platforms linked in the description below. I share real-time thoughts and breaking developments between videos that do not always make it into a full production. The community we are building across those platforms is one of the most serious and thoughtful in this space, and I want you to be part of it. This is John OG. Stay patient, stay informed, think for yourself, and I will see you in the next one.